All right. Well, welcome. We're really thrilled to begin to continue the conversation around innovation. My name is Kim Waller. I'm a senior client partner at Korn Ferry. I lead our organization strategy group around Power of All, thinking about how do you drive innovation through inclusion and collaboration. And so with me, I have my notes. I have an esteemed panel of experts, of leaders in the industry, really trailblazers. So I don't want to leave anything out while I introduce them. All right. First, we have Joan Lamb Tennant. She's chair of the board of directors for Equitable Holding and Alliance Bernstein Holdings. Previously, she was the founder and CEO of Blue Marble Microinsurance, who innovated extending climate risk insurance to the world's poor. Next, and we're going to applaud, I have Alex Mazarski, Chairman International of Marsh & McLennan Companies. Most recently, Alex was President and CEO of Guy Carpenter & Company. Alex also served as President and CEO of Marsh's international division comprising all countries, excluding the US and Canada. And then finally, we have Mike Morrissey, Chairman of the Board of Protective Life Corporation. Protective Life is owned by Dai-ichi Life, where Mike is also a director of Dai-ichi Life North America. Mike was also president and CEO of IIS for 11 years and also serves as a member of the executive committee and special advisor. So please join me in giving a round of applause to our amazing panelists. All right. So let's get started. Innovation. A forward-thinking board inspires and sets the tone from the top by championing innovation. The board also sets the tone by inspiring management to embrace change, adapt to the evolving market, and identifying technology and talent to execute on innovation. So we're going to get kicked off by one fundamental question, and it's how do you identify or how do you define innovation? I'll start with Joan.
Thanks, Kim. And thank you for inviting me back.
Yeah.
It's been a few years since I've been a part of the IIS, and it's wonderful to be back. I like to broadly define innovation. I think of it as doing something differently, but to create value. So for me, innovation is about new employee talent models, new engagement models with clients, new business solutions, new business models. Now, innovation is not just technology, but it's oftentimes technology enabled. You know, I'd like to ask the question, if I may.
Absolutely.
Why innovation today? Why is it so important? And it's about the pace of change. Do you realize that it took 80 years for the television to reach 100 million customers? Uber did it in 6 years. ChatGPT did it in 2 months. Mm-hmm. And with this rapid change comes different social norms and social values. So defending the status quo in this ever-changing world is really just a path towards extinction. Alternatively, having a courageous, curious, agile mind, all that's required for innovation, not only enables us to endure the ever-changing environment, but it becomes actually a way for us to achieve long-term resiliency. Thank you, Kim.
Thanks, Joan. Alex, how do you define innovation?
Well, I have the benefit of not having a balance sheet, so we don't worry too much about the claims side. We worry about our clients, of course. And so that gives a little bit more flexibility to innovation than perhaps a more traditional insurance company can have. Essentially, it's about our purpose. I mean, we're basically focused on clients, colleagues, shareholders, and communities. And there's always something going on. There's always something that can be done better. There's a need. I mean, so innovation for us can be anything from the use of AI, which we'll talk about a little bit later, but also it can be the development of a product that allows Ukrainian grain to have a war risk cover so that people can be fed. And so it's a huge ocean, and I think it's a mindset. I think it's driven by purpose, and you need to have people who are imaginative. You have to have diverse talents. I don't think it's 10,000 blooms. I think it's actually focus, discipline, iteration, reiteration, pivoting, etc. But it's a mindset.
Thank you, Alex. Thank you. Mike, how do you define innovation?
Thank you, Kim. Delighted to be back here for my 30th Global Insurance Forum. I rather like Richard Branson's definition of innovation. He says it's the process of taking a creative idea and turning it into a commercial success. And the venture capitalist and author Guy Kawasaki puts it even more bluntly: ideas are easy, implementation's hard. So that I think is the issue. As long as I've been in the business, there have been innovation units. They may have been called at the time research and development or special projects, but there's always been a unit, typically of dreamers, but it's the execution that really matters. I think my company's perspective on this is aided by having a Japanese parent, and partly through Daiichi Life. Protective really does embrace that Japanese concept of Kaizen, of continuous improvement. But if you look into what that word really means, it means balancing the creativity with the discipline on the execution. So that to me is what innovation really is.
Yeah, thank you. Thank you. So I'm curious, we talked earlier about data, we talked about purpose, we talked about talent. And this is for anyone, how would you prioritize culture and talent in driving innovation?
Well, I'll draw from my experiences at Equitable, but I think it's important to just give you a little bit of backdrop of who Equitable Holdings is. So Equitable is actually a 165-year-old organization. It was bought by AXA in the early 1990s. But when the Solvency II capital regime came into being, AXA decided to no longer operate in the life and retirement section in the United States. So that in 2018, Equitable became the largest IPO in the US for that year. So think about this. We formed our board in 2018, and a prerequisite was back to mindset. The prerequisite was that the board themselves had to be courageous, they had to be courage, they had to have curiosity, they had to have decisiveness, and they had to be agile. All the things that are required for innovation. So today, the board has a more nuanced role. Obviously, we manage our responsibilities towards oversight with actually engaging in all aspects of the business to drive long-term sustainability. So for us, as this newly established organization with a rich history, talent became first and foremost when we thought about innovation. But remember, we were able to build the house we wanted to live in. We recognized the retirement gap, that was the problem we wanted to solve. Globally, the retirement gap is expected to be $400 trillion by 2050, and in the US, $137 trillion. So we knew if we could rally a workforce around this big problem, we could not only solve problems for our clients, but we could actually establish our path towards relevance. The first thing we did was engage in a new talent model, and it was based on the framework of new ways of working. Now, new ways of working had been adopted by many of the technology firms, including the Magnificent Seven, that are driving the equity markets so rapidly. It had not been institutionalized in a financial institution. So we had to do a lot of customization. With New Ways of Working, we established a series of business issues that we had to think differently and do differently. These issues were everything from our operational efficiency to our employee engagement models, to how we created products, to how we formed partnerships. And we allowed employees, in fact, we invited them to self-select which one of these teams and which one of these problems they wanted to work on. One of the hardest parts of New Ways of Working was relinquishing control. So agile leadership was really important. Well, after 60,000 hours of training, we trained our employees on things like design thinking, adaptive mindset, and agile leadership. We have 100% of the workforce embracing new ways of working, which we like to just say is the way Equitable works. So around this, our employees have been innovative in coming up with solutions to our clients that have given us massive growth in our profitability and in our premium collection. And I'll talk more about that later.
Thanks, Joan. Alex and Mike, we heard again from the other panel that change is hard, innovation is hard if you really think about ways of working. And Joan mentioned new ways of working. Any thoughts that you can share in terms of how you inspire that from the board level, new ways of working, and making sure that you have the right talent to drive that?
Let me just give a couple of minutes on Marsh & McLennan, if I may. It's a complicated, simple company. And we obviously focus on, as I said before, clients, communities, colleagues, and obviously our shareholders. But it's 4 brands. On the risk side, there's Marsh, Guy Carpenter, a reinsurance broker. And then on the consulting side, it's Mercer, essentially human capital. And then Oliver Wyman, where Mick represents. And these 4 brands are pretty strong brands. And one of the main challenges we've had is to be able to optimize what they can bring to our clients by finding ways that the intersections where there may be an expertise on cyber in 3 of the companies, and to optimize our offering to them. So that's part of what we're doing at the moment. And that's actually forcing us to be more agile, forcing us to think in different terms. And I think one of the words that I've noticed coming into innovation over the last few years, and a little plug for Ecosway here and IDF, collaboration is actually a new innovation. And I think based on the panel and your speech, that collaboration piece around information, the use of information, trust, et cetera, is going to be the way we can try to solve some of the bigger issues. But at the end of the day, it's really about mindset again. It's about having people who are intellectually curious. It's allowing them to make mistakes. It's funding. It's a budget. It's basically, it's okay to fail, just don't fail seriously or serially, both of those. So again, when the board gets chosen, you have a diverse group of people. Not everybody's a tech expert. Not everybody's an expert in insurance. But it's just having that ability to have people who will go and ask the right questions and can motivate teams.
Thank you. That's interesting. You say not fail, allowing safety to be able to fail, but not fail seriously, right? The common notion around innovation is to fail fast and learn from it, but not fail seriously. Thank you. Mike.
I think I'd go as far as to say, without an innovation culture in a company, it would be hard to develop talent. When I think of the kind of culture that rewards curiosity and experimentation, doesn't kill careers where mistakes are made or bad news are delivered. I think if you have that kind of a culture, you develop somebody like Beth Carter, who won the Leaders of Tomorrow. So I'd like to think that that's the framework that can develop talent. A company like Protective, Alex talked about collaboration. I'll say the best innovation comes from out of companies that are see themselves as part of an ecosystem. In the case of Daiichi Life, with an innovation lab in Tokyo and another innovation lab in Silicon Valley, in which we participate, we're talking to the accelerators, we're talking to venture capitalists, we're talking to university people, as well as all the usual suspects from within the industry. And this collaboration and nurturing the ecosystem is what makes the innovation really thrive.
Thank you. Joan, anything else on collaboration?
No, that's important. But with collaboration, it really also leads to forming new partnerships, and I mean real partnerships. So we've recently established a partnership with BlackRock, where with the tailwinds of the Secure Act, we're able to embed annuities in target date 401k plans. And this is one of those win-win-wins. I mean, it's a partnership where the client wins because they can now start, as they're accumulating for retirement, to actually enable and see their decumulation, their guaranteed paychecks and retirement. It's a win for BlackRock, it's a win for Equitable, and it's a win for our society at large because, as I said, the retirement gap will have serious consequences as we continue to age as a society.
Thank you. I want to take us a little bit. We talked about talent, we talked about purpose, we talked about collaboration, and now the word that oftentimes is tied to innovation around AI. Alex, any thoughts on AI and innovation?
Well, we've actually, it's been a revolution at Marsh & McLennan. If you went back to look at sort of pulse surveys or employee engagement surveys at Marsh & McLennan 4 years ago, and you asked questions around technology, they weren't too good. There wasn't a lot of it. We weren't being praised for it. And part of it was the famous legacy word, and we're buying lots of brokers and buying lots of different companies, et cetera. And it was felt that we weren't helping our colleagues become more efficient and to provide better service to their clients, which is essentially their main passion. So we have a hub that was set up in Dublin, has about 85 people, and they began to look at AI. And within, I think, in 2 hours, they had a proof of concept. We now have, we're 85,000 people strong, 70,000 plus are using our internal AI. It's a proprietary information. And we're getting right now something like 2 million requests a month. We just had a pulse survey on technology, and it's right up there. So people are very excited. They're probably more excited than they should be, but we're coming from a sad place beforehand. So it's really more around efficiency. It's sort of having like a co-pilot for some of the things that you're doing. If you write an email and you'd like it to have a sort of nicer, more polite tone, you can do that too. I mean, it's interesting, but we have this AI Academy, and we all of us have our badges because it's a sign of weakness if you don't.
And so the AI Academy trains you on how to engage and use AI?
It tells you what you can do, what you can't do.
Okay.
And it's just like Erica and Bank of America, this is called Len McLennan.
Okay, all right. Mike, Joan, what other thoughts do you have in terms of developing talent, developing leaders for the pace of change, and perhaps AI or any other ways? How do you develop leaders and talent?
Well, I think I've talked a bit about how we've developed our leaders and how we've transformed the way we work. I mentioned that the most difficult part is giving up control, which is really critical. So what happens is, and why it worked for us throughout the pandemic, is that these teams who were innovating every aspect of the company that now exists, they established commitments and moonshots. Now the commitments, they delivered on. That's how they got compensated, that's how they got recognized. But they were able to also keep in mind as they're working on these solutions that there was the moonshot out there And we're pretty proud because within the last 3 months, one team delivered a moonshot. You know, that was just absolutely celebrated throughout the whole organization. If I could add on AI, we totally democratized AI. You know, we immediately figured out how to put up guardrails so that our data would not be out in the public market, but to make AI available to all employees. We currently have, I understand, over 45 viable use cases throughout the organization, but what's real powerful is that they're coming up from the employees. And eventually these use cases will merge and start to determine innovative ways to drive big systems like legal, like asset management, like product development.
That's phenomenal. Mike, any other thoughts?
I first visited Protective Life in 1972 as an investment banker. I was obviously a precocious child at that time, 1972. But it was a traditional American life insurance company. The Dai-ichi entered the scene about 10 years ago. Dai-ichi was the first mutual life insurance company in Japan, the first life insurance company to demutualize and then go public. So it's been an innovative company and brought to Protective the spirit of innovation. So, you know, now we've got the Protective Life Innovation Fund that's invested in a company that's using behavioral economics to study the underinsurance protection gap and doing all sorts of creative things, including but not limited to AI. Great buzzword. But you know, this is where real innovation is, and it's being done in a disciplined way that will permit small failures and mistakes along the way, but not company killers.
Yeah, yeah. What would you say, this is sort of a sidebar question for each of you, what would you say to a leader that says, I'm a little uncomfortable, I'm used to having top-down decisions made and top-down change happening versus being comfortable with the kind of innovation that can happen, as we heard before, from the ground up? What would you say to advise leaders to get comfortable with that?
Get another job.
Oh. Anything else on that?
Well,
right.
I'm assuming this individual has core skills that are very important to the organization, and that I'm assuming that. Otherwise, I perhaps would agree with my colleague Alex. But I think that if they fully understand how you can achieve results yet give up control through agile leadership, through this example of employees making commitments on these innovation charges, as well as moonshots, I think that they will become much more comfortable with giving up control.
Thanks. Mike?
I'm just reminded of a comment that was made when I was a young investment banker in the merger and acquisition business. And my boss said to me, it's not just that big companies acquire small companies, it's really that innovative companies acquire companies that are not innovative, whether they're large or small. And in my early days in the investment part of the insurance industry, there were more than 100 publicly quoted life insurance companies in the United States. Now there are about a dozen. And the ones that disappeared weren't necessarily failing, but they failed to innovate. So
it's a powerful example.
This consolidation will continue and probably accelerate.
Yeah, yeah. Joan, how do you measure innovation?
Well, there's a lot of metrics that we follow. And I'll just start with the talent model and then go on from there. Like on the talent model, we've seen things like significant increases in our Net Promoter Score. It's increased over 13 points since we put new ways of working into place. Psychological safety has gone up 11%, and decision-making expediency has gone up 7%. I'll go a little further. We've innovated new products. One of the products that we innovated was structured capital strategies that gave annuitants the opportunity to enjoy upside equity markets with downside protection and do it in a manner where we can manage the risk. In that product alone, in the third quarter of 2024, We have over 58 billion in assets and 65 billion in sales with 287,000 policies. So, I mean, those are like input metrics, if you will. And we track those, and they're all innovations, talent, product. The last one, and we do look at it, and I'm going to say this with a bit of a smile. Our stock price since IPO is up 165%. Our peers is up 109%, and the S&P 500 is up 137%. Now, my colleagues that are with me today, our CFO and my colleagues, remind me that innovation isn't the only driver of stock price. There's many, many drivers. But I think it's plausible to say that it's surely one of them.
Amazing. Thank you, Joan. Alex, Mike, anything around measurement of innovation?
I think there are loads of measures, but they are, and it can be your price earnings ratio, it can be your profitability, cash, etc. All those are the macro ones. But to the extent that we're focused on our clients, and that's what keeps the morale of our people feeling really good about life when they're doing good things, and the market cap. Those are good measurements. There's something new happening all the time. The position of an intermediary gives you a nimbleness as long as you're making money and you're creating cash, and you can acquire, you can bring in teams, you can bring in talent, you've got the right sort of environment. People have this motivation of doing the right thing for their client base. It's really exciting. And I just think that it's a holistic view of the health of a company. And then again, go back to pulse surveys with our folk, or see how the different businesses are doing, lines of business are doing. If they're doing well, and the engagement is there, and technology and innovation, and the ability to make a mistake and feel safe. All those things just, give you a holistic view that the temperature's fine.
Yeah, thank you. Mike.
The issue of relevance of our industry and our products has come up several times already. And in the life insurance industry, the evolution of innovation, as I see it, is from what was perhaps 5 or 10 years ago, finding a new way to shave operating expenses, developing a new term product that has better characteristics than the old term product. Now the innovation is taking a broader view of what is this industry really? Is it just sending checks to a surviving family member after somebody dies? No, let's look at it as wellness. Let's look at it as wealth management. Let's look at it as a broader sense of what the industry can do. In the United States, where 20 years ago, 70% of adults had life insurance, and now it's 50%. So you better be concerned about relevance and product substitution and the growth of the asset managers at the expense of life insurance companies. So innovation's different.
Yeah. All right. So we have questions. I can't see, but you can present a question on the app or go to the mic. Can you guys see?
It's not up there.
Okay. Again, this is supposed to be participative. Any other thoughts in terms of what would you say to a leader in terms of the pace of change and how to get ready for the pace of change and the relevance?
Still accelerating. I see innovation ideas. I see conferences. I see senior management succession decisions being driven by who appears to be a more innovative candidate as opposed to simple technical qualifications. I think that's probably the acid test. It's being taken into consideration more in CEO succession discussions.
Thank you.
So I'm actually retiring at the end of this year, and I have a beef at the moment with the industry. We spoke about it a little bit before. I think the protection gap is an embarrassment. Yeah. And I think we need to do a whole lot more to try and fix it. The world is getting more and more difficult, but there's more and more data. There's more and more ways of skinning this cat. And I would like us all to kind of try and solve to it, because the lack of resilience for many, many people around the world in 2024, 2025, given what we do have to work with, I find an embarrassment. There you go.
All right.
I guess I'd add to it by saying that as an industry, we are losing our relevance. Yet what we do is highly important to the financial well-being, and I'd like to say the holistic well-being of society at large. So I think it's critically important to listen to what our customers ask for, what they need, and then with that, be responsive to their needs, as opposed to necessarily what products we've been writing, things we like to do. In other words, put the customer first, and know that then it's important to also invest in your employees, because it doesn't happen overnight. They're the ones that are going to do it.
Regulators need to help as well. I mean, this has to be an effort. This has to be a global effort to make the world a better place. Capital relief, incentives to insure things for the first time. Data, sharing data. There's a lot to be done. I think it's a great opportunity, but we need. I don't like share buybacks, by the way, for insurance companies. That to me sounds like, well, hang on, there's not enough. There's nothing there we want to insure, so we'll send you back some money in the next quarter. Again, I find that hard to reconcile with all the things that we need to do.
That's right.
Here. Oh, there we go. Here's another question. Any questions from the audience? No? I know you have some. If you were to look, now I'm going to ask a bonus question then. If you were to look 20 years from now, if innovation has really continues to take hold, what does the world of insurance look like? And in all fairness to the panelists, we did not talk about this, so I'm asking them to think on their feet.
I think the industry gets more Darwinian, more consolidation. Few companies can keep up with the enormous amount of money required to develop AI systems, technology systems. I think the industry will improve its performance in the capital markets by investing not more aggressively, but more creatively. Other long-term investors like sovereign wealth funds, and endowment funds, and family offices typically have 20 or 30% of their assets in alternative investments. Insurance industry typically has 3 to 5. That hurts policyholder security. So I think there'll be a revolution in how insurance company investments are made.
Okay. Joan.
Well,
Forecast.
I'd like to believe that in our situation, we experienced a shock, right? We were an IPO in 2018. We had to start with a blank sheet of paper. I don't think that's necessary. I think that with the realization that leaders in our industry are beginning to realize the threats to society at large, be it climate, be it under preparation for retirement. And with those threats, those that embrace innovation, talent empowerment, and agile leadership will become to dominate the industry. And I continue to think that we, as an industry, newly defined, will continue to be a major player in solving some of the serious problems, with partnerships, of course, that society faces.
Thank you. Alex.
I guess my perennial request would be that data and analytics around climate change and climate issues should be shared, and there shouldn't be black boxes. If I'm the mayor of Lagos, or if I am an individual selling something, a small, an SME somewhere, I want to know what my risk exposure is, and I would like that to be a commodity. We can compete on other stuff. We can have an appetite for risk or not, but I think that the commodity of that type of data is important.
That's powerful. All right, so we have a question from the audience that I'll ask. What role does regulation play in innovation? Who wants to start?
It can stifle it,
That's exactly.
or it can encourage it. For instance, right now in India, we've gone from having a regulator or regulatory system that was probably a stifler, and now with Chairman Panda, we have an innovator. So it's a very different approach. I do think there's got to be some capital relief for insurers taking on risks that historically they haven't done.
All right. Mike.
I was asked to review a proposed piece of regulation by the old CIRC, the China Insurance Regulatory Commission, and my eyebrows went up as I read it because it said, while the growth of the insurance industry has traditionally been seen as derivative of the growth of the economy, we think the insurance industry can be used to stimulate greater growth of the economy. And I thought, here's an idea of where regulation can either frustrate or stimulate.
Yeah, that value creation versus just value protection. Joan.
Yeah, I'd just like to encourage that good regulation is a good thing, right? And that we have to bring regulators along. Now, I know they're there to provide oversight to us, but we have to develop our regulators as well.
That education. Yeah.
Yeah.
Other questions? Yes. Oh, yes. You want to go to the mic, or I'll come down to you, whatever's easiest. Oh, straight over there to the right. You see it?
It's been a great conversation on innovation, beginning with Andreas' speech and these two panels. Having been around the legacy industry for a whole career, but also around legacy companies trying to innovate, and also working with technology companies and VC funds trying to engage with the insurance industry on innovation. I've got a couple of observations, but then a question of how you solve what I think is one of the biggest problems. The insurance industry is undeniably slower to adapt and embrace change than your counterparts in other parts of the economy. That's probably not a big shock. There is a lot of internal work that is being done, but I think the biggest blocker is silos. It's true in all sorts of operations of an insurance company, but around innovation, we see over and over again silos that include siloed budgets. Somebody loves an idea, but doesn't have the budget. Somebody has the budget, doesn't allow it. Profitability centers. Even the internal innovation centers can be a huge silo, or maybe, importantly, a blocker to innovation when the innovation is coming from outside the company. Many, many times, companies have invested a lot over a lot of years for internal people to develop models or technology. And when an outside innovator comes in and presents something, we've seen it many times, the people that kill it the quickest are the people whose job preservation instincts kick in and they say, wait a minute, no, we can do it better. Sometimes they can, sometimes they cannot. So the real question, it's probably more of a CEO question than a chairman, but it is because culture and strategy is the province of the board. But I'm wondering what your views are. Do you see those silos? Do you see a way to try to dismantle them?
Great question on silos, and thank you for the candor.
I think it's really tough. The profit center mentality, which allowed some of these companies to become very, very successful, to say, well, we're gonna let you, we're gonna take that away, and you can go out and be innovative. when you're paying claims, you've got to be careful about what you're writing. And I think that, I don't know what the solution is there.
The only thing I would suggest is I find it kind of novel to be talking about an innovation budget, because innovation should be embedded in every function within the organization. So it should be embedded in every single budget within the organization. So if we allocate money to innovation, it also creates a divide amongst the people in the organization. I'm on the innovation team. You're on the process management team. Do you see what I'm saying? Like it creates a real psychological barrier, because innovation doesn't happen with just a few bright lights. So I'd like to dismiss with the idea of an innovation budget and just embed it in every single operation of the organization.
Bill's question gets to the number of ways in which an innovation effort can fall short. When I came into the business, about 35% of the world's insurance premiums, life and non-life, were written by stockholder-owned companies. Now it's about 70%, meaning a lot more companies have quarterly reporting to shareholders. They're concerned about meeting expectations. And sometimes an innovation effort can be frustrated when a company's orientation is too short-term. That goes along with making sure the innovation effort is aligned with the strategic plan and gets the right funding. But these are, you mentioned others. There are several things that can stymie a well-intended innovation effort.
Yes.
It's not the question, it's maybe suggested answer to you, Alex. And Bill, we discussed this yesterday. For me, we have to really break it down to something very concrete. It's about the organization of data. Because when you don't get that right, then the innovation is difficult. And we answered that question exactly in our company, because your profit center thinking, that's exactly what I meant by distinct business unit thinking. The BU CEOs, business unit CEOs think that they have to own it. And as a group, we decided data and data scientists who work with it are actually distinct in the business units. But how we deal with data, this is what we decided is not distinct in the business unit. So this sits across, that's common, because they all see a commonality here. So the ontologies, taxonomies, etc., that's not business distinct. But once you get this right, then suddenly, you have to accept as a business that this is not my remit. So maybe a way to think about breaking the silos.
Go ahead.
Actually, I'm going to kind of go back to something that Alex said about democratizing data. I'm going to play a twist with words. An economist last week shared this with me. I was teaching at the Wharton School, and he said, we use the word data-driven decisions, but really it's decisions that are data-enabled that drives value creation. So with that, then, it's the decisions that we make as individuals, the markets we play, the people we hire, the products we innovate. I just don't understand why we would not democratize our data, because that's not the differentiating element that's driving value in our organizations.
Well said. Well said.
And first, a comment. As a Wharton alum, as a Wharton grad in the 70s, I was doing simulation modeling of widgets. Widgets is, and then the first job was doing a nuclear model, simulation model for American Electric Utilities. So whether it's widgets or the risk of nuclear power plant accidents at Wharton, it's all treated as the same. There shouldn't be everything should be in a massive data lake, and we can extract it as we wish for whatever purpose we wish. So democratization of data, I think, is critical for the future. That's just a comment on Ms. Lamb's comment about being at Wharton. Thank you. The question I have is, one of the greatest challenges that I'm hearing in all the conferences I've been going to is the talent. We are aging out. I'm 76. Yes, I want to keep working for 10 or 20 years, but we can't all assure that we're going to be around for 10 or 20 years. We have to replace our talent. And one way to attract talent is by presenting ourselves as a source of innovation for the economy and the world. Just a thought.
Comments on that? We heard, Alex, you talked about
Violently
purpose.
agree.
Yes.
I fully agree. You know, I actually had the good fortune in the early years of my career of being an academic. And so someone would say, how is it that you see the future? I said, well, just hang around with 25-year-olds and you'll see the future. But the problem is with the 25-year-olds, the 35-year-olds in your organization, you have to adapt to agile leadership. You've got to be able to give up control, yet still create commitments so they deliver, because we have commitments also to our shareholders. So your talent is your most valuable asset, and it's the root, the foundation for our ability to innovate. But you have to allow that to happen.
Yeah, that mindset shift in terms of how you're enabling and activating talent. Mike?
I was just thinking that it's always been difficult for the insurance industry to compete for young talent. Graduates of good colleges want to go to work for McKinsey or Goldman Sachs or maybe Google or NVIDIA. And it's always puzzled me that insurance doesn't seem like that sexy a career. I never figured out why it wasn't more broadly seen as a sexy career. But I do think the development of these public-private partnerships like the Insurance Development Fund, where the risk management expertise of the industry and the investment portfolio capabilities of the industry, combined with public institutions to solve these enormous problems, protection gaps with respect to property and casualty coverage and extreme weather events. But on the other side, the retirement savings gap, which is equally enormous and troubling. So I think we're doing a little better at hiring young talent. We have a little better story to tell, not just that it's a noble industry, but it's a fascinating industry involving geopolitics and the climate change and everything. So I think I've seen, as I travel around the business, I've seen more companies making an effort and actually succeeding at hiring a better level of talent than they did in the past when they sort of took whatever came their way. I think it's getting better.
Right. Did you
Yeah,
have?
it's interesting. It's how you present the industry to young talent. Young talent as both our employees and our customers are asking, well, what's your purpose? Like, what role do you play in society? And they will clamor towards having relevancy. Not relevancy is the word I'd like to use. So with that, I think we would be much more capable of embracing new talent and also energizing the talent that we have if we dismissed with the nature of our products and talked about the purpose and the problems that we aim to solve in society.
That's fantastic. Again, we continue to hear about purpose and it being a business imperative for being able to attract top talent into the industry, which is critical for innovation to continue to occur. My last question your last question for today is, what's the biggest innovation under your tenure at your firm that makes you the most proud? Joan.
Oh, that's a tough one. I'm really proud of the talent model at Equitable. And I just celebrate when I see it flowing through the organization in terms of a recent milestone that we reached, which was $1 trillion of AUM AUA. But I will forever be proud of the work that Blue Marble has done and the opportunity to actually see what happens when first-time insureds have protection against climate risk and are capable investing in the lives and the livelihoods to enrich their families and their communities.
It's phenomenal, phenomenal work. Alex.
You know, I don't have one. I have so many things that I really love that I did or got involved in or did what people did with me, not what I did. But I don't have one.
Okay, all right. Mike?
New opportunities are coming up all the time. I mentioned in passing a few minutes ago an investment that Protective has made in a company that's using behavioral economics to try to solve the underinsurance problem. It's very proud of, but frankly, in the spirit of innovation and the venture capital relationships that we have, we're making a lot of new investments that are promising. So it's not just buying commercial mortgages and corporate bonds anymore, using our investment portfolio to stimulate innovation.
Yes, thank you. Well, if there are we have one more question? Okay.
Yeah, if there's time, thank you. Hey, my name is Mark Brown. I'm with St. John's University, Greenberg School. I really appreciated the discussion regarding future talent coming into the industry and innovation, and I kind of want to bring those two together. Yesterday, there was an article in Bloomberg that talked about advances in AI potentially destroying a lot of the entry-level jobs in different industries. And one of them was underwriter. So the first couple of years of commercial underwriting, oftentimes people learn a lot in those years. I'm just wondering from the panel, and thank you all of you for speaking, I really enjoyed it. I'm just wondering what your thoughts are about that. Is this a danger for the industry that entry-level jobs get gutted out? And then what happens to training to prepare people for upper-level jobs?
All right, who wants to grab that one?
It would seem to me that the question's almost been answered in that, all right? You will need to have educated, experienced underwriters. You're not going to live without them. And so how you form them? Perhaps you don't use AI for the first 2 years, or you do something else, or AI is used as a facilitator, but not as a replacer of jobs. So I think that the humans who are still going to be running the show will figure out a way to make the most out of AI. We'll figure out what's the best way in what has essentially been an apprentice business for a long, long time.
Mike, Joan, who wants to take it next?
Well, I'd like to think that AI is going to enrich the jobs as opposed to destroy them. We will do things, but do things differently. We'll do things more efficiently. We'll do things and make decisions more informed with data. So I'd like to see it will enrich jobs.
I don't see a lot of layoffs, Mark. Good to see you, Mark. But I could envision, as I already see it at Protective Life, AI being used as a wonderful tool for the existing professional staff. Maybe the increase in the number of professional staff decelerates, more people having these tools to use. But I don't see, as some people have feared, a large number of layoffs of non-customer facing insurance, lower level professionals. I just don't see it.
Thank you, everybody.
All right, well, fantastic. Thank you so much. Any parting words? One final word that we haven't discussed? This has been a rich discussion. What haven't we talked about that you want to make sure?
Well, maybe a final phrase is just imagine. Imagine what this industry could do if the mandate was to innovate.
Parametric. I'll leave it there.
All right.
I would just reiterate that the innovation thrives when the creativity is balanced with disciplined execution.
Fantastic. Well, please join me in giving a round of applause to our amazing panelists. Before we head to break, please take a moment to participate in our innovation poll by scanning the QR code on the screen. And the next session will be innovation benchmarking.